Morning, guys.
Hi.
Good morning. Morning.
Morning.
How are you all doing?
Not
Good.
bad. Happy it's Friday.
Yeah, happy Friday to everyone. I think as we wait for people to log on, I'll quickly introduce us. And we've got David Slater, who's our AVP of Investments, and Graham Marshall down in Barbados, who is our Securities Investment Advisor in that region. So as I say, as we wait for people to log on, I mean, a sort of brief COVID update, seeing that that's the sort of talk of most of the investment discussions out there. And I think certainly in the Bahamas, I think Bahamians can be proud of the way we've managed to lock it down. And I think as of yesterday, there are only 24 active cases, and certainly sort of heading in the right direction as the local economy opens up. I don't know, how has it been going down in Barbados there?
Pretty good. Our total active cases now is 6, and 4 of those actually came in on a flight on Tuesday, repatriation flight, and they were at the airport, quarantined, and everything. So
Okay.
of course it counts, but it isn't. That's not a bad figure.
Good. It looks like we're all chasing New Zealand, who's got it down to naught.
Yeah.
So hopefully we'll get there soon. So I think the point of trying to run these live sessions is really give our clients and any people out there an opportunity to get involved in a Q&A, ask any questions that you have around local investment markets. David's going to go through some of the international equities and market information out there. So if you do have any questions, just put them in the comment section below, and we'll answer them as we go. So for those of you that might have watched our live session a couple of months ago, I think we sort of tentatively said that we were confident that our Bahamian dollar funds were not going to be too negatively affected by the whole COVID situation, and that's actually started to come through. And so far, we are still very confident that our funds are going to shape up through this crisis. So what I thought I'd do is give a quick sort of update on what the returns have been looking like on our prime income fund, on our secure balance fund, and our targeted equity fund. And then I'm going to hopefully share some exciting news with you around our prime income plus fund, which is our prime income fund that pays out a dividend twice a year. So the good news on our prime income fund is that the return over the last 12 months is 5.15%. And I think, as we've always said, we see it as a safe haven for Bahamians over this time, where you can pretty much hopefully count on in between 4.5% and 5.5%. And if you go and have a look at the history of the fund, that's what it's done over almost since inception, but certainly over the last 10 years. The up-to-date allocation of the prime income fund has around 33% in corporate bonds and notes. There are 45% of the fund is made up of preference shares, and around 14% in government bonds. Certainly, as far as the local market goes, we've seen that our prime income fund generally outperforms the market by around 1% of whatever else is out there. So certainly, if you're an individual sitting with cash in your check or savings account or in a fixed deposit that's not getting around the 5% mark, put your name or give us a yes in the comments column, and certainly one of our investment advisors will get in touch with you. Also, good news on our secure balance fund. In the last 12 months, it's done 8.3%. So that's come off slightly on the year-to-date number, but over the last 12 months, as I say, 8.3%. And that is the fund is split up between our targeted equity fund and our prime income fund. And then lastly, our targeted equity fund has done 11.4% over the last 12 months. Last year, if you were tracking the fund, you would have seen it had an excellent year of close on 20% return for the year. So that's come off a little bit in the new year, but certainly a fantastic result for the equity fund over the last 12 months. So I think some good news on our prime income fund is the prime income fund is made up of an option of having your returns or your interest or your growth reinvested into the fund, or having the option of having the dividend payout twice a year. So what we're happy to announce from June, in order to help get more cash into the economy, we're going to increase the dividend rate on the prime income fund to 4% per year. That means it will pay out 2% in June and 2% in December, which will pay out into a brokerage account and then into your sort of checking or preferred account. So I think that's quite an exciting and fantastic actually initiative when you compare it to having money sitting in non-interest bearing accounts. So the most common question I get around that is it guaranteed? Is the 4% guaranteed? And I think the sort of indirect answer is yes, it's guaranteed in that you are going to get paid out 4%. The real question is it going to eat into your capital? So when we backdate the prime income fund, it certainly wouldn't have eaten into your capital. And if you'd been in this prime income plus fund for the last year, you would have had 4% payout to you, and your capital would have still grown by 1%, which is again more than what you get in your bank account by a long way. So certainly get in touch with us. We can assist with helping you understand how that fund works. It is a relatively straightforward and seamless process to get yourself set up, and we'll have one of our security investment advisors contact you. Just an update on our US dollar funds that we're hoping to get available sort of as far and wide in the region as we can. But the International Opportunities Fund over 12 months has done just under 3%, so 2.9% in the International Opportunities Fund. It's largely an underlying growth and value fund that is managed by a team of highly skilled individuals that we've chosen through the assistance with Morgan Stanley. The targeted income fund has done 5.8% over the last 12 months, which again is I think a very solid return for a conservative fund. Our hedge strategies fund, which is underpinned by sort of 3 underlying hedge funds, is down 3% year to date, but we're hoping that will pick up over the second half of the year. So that is a sort of quick overview of some of the Cayman dollar and US dollar funds. I think as what we're certainly feeling confident about is that the returns have been good. As we mentioned when we were going into the whole uncertainty of COVID-19 and the coronavirus story, that we were comfortable that the returns would hold up. And so far to date, the returns are still looking really good. And I'm hoping that you can get in touch with us if you wanted any more information on it. I'm going to hand over to Graham in Barbados to give us a bit of an update there. As I said, we'll do the Q&A at the end. So if you've got questions coming through, send them through, and we'll answer any questions that you may have at the end. But I'm going to hand over to Graham to give us an update of what's happening down in Barbados.
Yeah, thanks, David. Good morning, everyone. Last we spoke in end of April, our office was working from home and returns were not looking the most positive at the time. I'm happy to say we're back at the office now. Our office is fully open and returns are looking a little bit better this month than when we last spoke. I'm going to start with our Strategic Growth Fund. This is our Barbados-based equity fund. The fund received a nice bump this month of about 3.29% for the month of May, reducing its loss to about 8% year to date. Last we spoke, it was closer to 11%, so it's moving in the right direction. In March, the fund appears to have bottomed out in line with global equities and made some recovery in the last 2 months. As economies open back up and add more optimism, we're seeing more optimism in the markets. The recent gains in the fund are mainly due to our US exposure, which David Slatter will speak to more after. The local and regional companies in the portfolio have mostly reported tough quarters, but they do share some optimism with strong balance sheets that they'll be able to ride out the storm and hopefully come out stronger after this. We're still in the midst of this COVID-19. There's a strong mix of hope and despair we see on the news daily. It goes back and forth from all over the world. So we would expect volatility to remain in the near future as everything continues to unfold. If history is any indication, market always bounce back stronger, but we'll only know that when we look back at it. Whether that's today, end of the year, or next year, we really don't know until we're looking back. I'm going to switch over to our premium income fund. This is our Barbados-based fixed income fund, the more conservative of the three. For people who are less risk averse, this is usually a suitable option. The fund posted a steady return for 2020, just over 3% for the first 5 months, and it maintains an average return since inception of over 4%. A third of the fund has exposure to US corporate bonds and treasuries. The local and regional portion of the fund and private bonds and some government bonds have provided steady returns for the fund historically. As COVID-19 will no doubt continue to move equities in both directions, up and down, this fund may be more suitable for people who are looking for a steadier rate of return and not looking to take the risk of global markets and local equities as well. Also, with the commercial banks having next to no savings rates, term deposits are quite low in this environment. This may be a suitable place to park your money and get some attractive returns and try to beat out inflation. And lastly, I'm going to talk about our balanced fund. This fund sits nicely in the middle of the growth fund and the premium income fund I mentioned. It was a 50-50 split of both portfolios. So for people who want to take some level of risk but don't want to go all the way into the equity fund or growth fund, this fund may be suitable for you. The year-to-date performance for the fund is a negative 2.68%, but the one-year return May to May would be just over 2%. This is the first mutual fund in Barbados, started in the late 80s, and here we are in 2020, and the average return for that would be over 4% as well. This is a wrap of our three funds. Remember, our office is open, so you can give us a call. You're welcome to come in. If you have any questions, please leave your comments or shoot us an email. We'll be happy to assist you. David, back to you.
Great. Thanks very much, Graham. Good to hear things are getting back on track in the
right direction.
So I'm going to hand over to David Slatter to give us a sort of global update and an equities update. Who's very well familiarized with what's happening out there. So let's hear from you, Dave.
All right. Well, good morning, everyone. Great update on Barbados, Graham. And I'm David Slatter. I'm the AVP of Investments here with Royal Fidelity. So oversee the investment management side of our mutual funds, as well as our high net worth client portfolios. So kind of the first thing I wanted to speak to was just to give you an overview of what's going on in the Bahamas, Barbados, and Cayman with respect to the economies and reopening. So if we look at the Bahamas, kind of the key things to note, we have a gradual reopening of the tourism sector that's going to commence June 15th. So on June 15th, private aircraft, boats, and pleasure craft will be allowed to enter the country. Then on July 1st, the remaining of the industry is expected to open. At what pace tourism arrivals come in, that remains to be seen. We don't have a crystal ball, but we do, from a prudent standpoint, expect it to be gradual pickup over time. And then on the COVID-19 crisis side, I mean, here in the Bahamas, things have stabilized. We've had 103 cases, no new deaths for weeks now at 11. And we've done 2,252 tests, small percentage of the population, smaller than we'd like to see, but it is what it is. But things seem to have stabilized. One thing that's unique for the Bahamian investor versus the Bajan or the investors from Barbados and the Cayman Islands, we do have restrictions on foreign currency purchases for investments. So those returns that were discussed earlier about our international funds, if you're already invested, then you're happy. If you haven't invested yet, unfortunately, you'll have to wait till those restrictions are lifted. Then the next I want to talk about Barbados and just quickly speak to what's going on there. I know the PM recently noted that all businesses will be reopened on June 15th, as Graham mentioned. They do have the weekday curfew is going to be lifted. Their weekend curfew remains in place. That's the same as the Bahamas. except our curfew is all week long from 9 p.m. till 5 a.m. And then in Barbados, they've done 6,321 cases, over 2.2% of the population. The reason I'm noting that is because the level of testing, I think, will bear fruit down the road as far as the risk of a second wave of the crisis. So Barbados is doing a better job than the Bahamas as far as testing. And now if we speak to Cayman, you'll see that they're doing a stellar job as far as testing. They're almost up to 17,000 samples tested, over 25% of their population. They actually have the highest number of cases, but they've also done the greatest amount of testing. And they've also got this high testing system that they're going to put in place called Gene Expert Machine, which will allow them to actually test incoming visitors within a 45-minute period. That said, they don't expect the tourism industry to open until the end of the year. So despite being, more prudent with how they've dealt with the crisis with respect to testing and taking care of the population, they're also being more prudent with respect to when they expect to reopen their tourism market. Now, if we speak to what's going on globally, this week the chairman of the Federal Reserve in the U.S., gave his talk. And when the Fed chairman speaks, markets listen. So kind of the key thing he said was that, they're not even thinking about raising rates till 2022. And when markets hear that implies that their expectation for future economic growth in the U.S. Is uncertain. And even though they have their median forecast of all of their committee is that there'll be a contraction of 6.5% this year, followed by a 5% expansion next year. The opinions are all over the place. So I think as months go on, there'll be greater consensus on what they expect, and hopefully less uncertainty about what's going to happen. Now, if we go to another source of economic forecast. So this comes from Bloomberg, and they get economists that contribute, and they take the average of all of these experts. What I've highlighted are the quarters in yellow where there'll be negative GDP growth expectations. And kind of the key thing for our markets is if you look at the U.S. and you look significantly, most importantly, the U.S. economy, and at the bottom, the Canadian economy. A lot of our tourists in the Bahamas come from those jurisdictions, as well as the Cayman Islands. Then if we look at the UK, more applicable for Cayman and Barbados. You see that for the US and Canada, there's an expectation of a short recession of 2 quarters. Very significant drop in GDP in the second quarter, followed by sharp increases for the next 2 quarters. So this idea of a V-shaped recovery, a very sharp drop in economic activity followed by a very sharp rise. And equity markets around the world have been, pricing the market based on that expectation. Now, Europe, on the other hand, you see that they're not expected to really get back into positive territory until the second quarter of 2021. So a slower recovery for the Europeans are expected. Then if we go on to what's actually been happening in the markets, this gives you an idea of the volatility that we're seeing in global equity markets, right? So in the second quarter, for example, the S&P 500 lost 20%. But then as of June 8th, it's actually back to flat. So all of that pain that was suffered during March in particular, they've recovered that and they've gotten back to where they were at the beginning of the year. Germany, Japan, Canada, similar stories. They haven't quite got back to the break even as far as the beginning of the year. And as you can expect, gold is, people usually go to gold and during periods of uncertainty. It's gone up 12%. One thing, you see the price of oil down 37%. That bodes well for, keeping inflation under control and perhaps assisting with the economic recovery. Oil has recovered since its low, but it's still down significantly since the end of the year. And next, if we look at the S&P 500 in particular, just gives you an idea of the volatility over the last few months, right? So back in February, it hit its all-time high, just under 3,400. And then by a month later, it was down 35%, just under 2,200, and that would be around the 23rd of March. Since then, it went up 47.5% from the bottom to its peak on the 8th of June. And as anybody was watching the markets yesterday, I'm sorry, the day before, no, yesterday, they saw a sharp, drop of around 6% in the S&P 500, and that was on the back of the Fed chairman's comments about interest rates not rising. Also, new cases starting to increase, accelerate in certain states in the United States. So the fear of a second wave. And, the reality is the Memorial Weekend in the U.S., there was far too much social distancing was not being adhered to the way it should be. You have a spike. The recent protests that have occurred in the U.S. and other parts of the world as well, there's no doubt that 2 weeks after that, we're going to see another increase in cases. It's just inevitable. When people get together and they're very close quarters and not everybody's wearing masks, you will have additional cases. So that's something that we need to bear in mind, is that, we're going to have this volatility. We're going to have fluctuation in the number of cases and the rate of growth or decline of cases for COVID-19. The markets will react to that. But what you have here at this point, in my opinion, some thoughts for you. If we go to the next slide, please. So, you need to remain updated on what's going on with COVID-19, especially with treatments and vaccines, because until we have a treatment or a vaccine, well, vaccine is the ultimate treatment, there's going to be a volatility in the markets, right, as COVID-19 data comes out. So make sure your investment decisions are based on medium to long-term perspective. What you need to do is take advantage of the volatility in the short term and invest for the medium to long term. And how do you do that? Well, if you invest everything on one given date, then you're dependent on that price you bought in at. So if you're looking at taking advantage of this period, you maybe invest on a staggered basis, maybe monthly, and therefore you're taking advantage of the volatility. Yes, there'll be some months when you pay what seems to be, in hindsight, maybe a higher price than you thought, but you'll definitely also take advantage of drops in the market. So, for example, the decline of 6% yesterday, that would be an opportunity to get in and take advantage of the market selling off a bit. But remember, remain medium to long term in your perspective, not short term. The few mutual funds that we have that David talked about and Graham talked about are a great way to take advantage of this. This is kind of a unique opportunity for maybe the next 10 to 15 years for investors, right? When the markets sell off like this and there's this level of uncertainty, the level-headed investor takes advantage. So our mutual funds are a great way to do that. And once again, if you got any questions about the funds and how you get in and how they're doing, how they've done historically and how we think they're going to do going forward, please contact us. So thank you.
Fantastic. Thanks very much, David. That was very insightful. Thank you very much. I'm not too sure if there are any questions that have come through, but certainly we are available. Our offices are open. Please contact us either via our emails or our contact numbers. You can go via our website at royalfidelity.com. But thank you very much for your time, gentlemen. I hope you have a good weekend. This is our first weekend of no lockdown in the Bahamas. So let's hope everyone behaves themselves. But thank you very much for your time.
Cheers, guys. Thank you.
Bye-bye. Thank you, everybody.
Very much.